Ladies and gentlemen, good day and welcome to the Star Cement Q3 FY22 conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Aman. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q3 FY22 call of Star Cement Limited. On the call, we have with us Mr. Sanjay Kumar Gupta, CEO, and Mr. Manoj Agarwal, CFO of the company. I will hand over the floor to the manager of Star Cement Limited for their opening remarks, which will follow the entire Q&A. Thank you, and over to you, sir.
Good evening, everyone. I am Sanjay Gupta, CEO of Star Cement. I would like to welcome you all in this earnings call for Quarter 3. I have with me Mr. Manoj Agarwal, CFO of the company. He will take you through Quarter 3 numbers and 9 months number for the current financial year. And after that, you will be able to ask questions and will be happy to reply. Over to Manoj for updating you on Quarter 3 numbers. Manoj.
Yeah. Hi, friends. Very good evening. I, on behalf of Star Cement Limited, welcome you all to our phone call for discussing our number for Q3 FY22. I would like to clarify that we are discussing on the historical numbers and there is no invitation to invest. Having said that now, I will just take you through the Q3 number followed by 9-month year-to-date number. Starting from clinker production, during the quarter ended December 21, we have produced 5.25 lakh ton of clinker as against 5.89 lakh ton. We have produced 8.57 lakh ton this quarter as against 6.59 lakh ton same quarter last year. Now I will take you through the sales volume. During the quarter we have sold 8.62 lakh ton of cement and 0.12 lakh ton of clinker as against 6.62 lakh ton of cement and 0.29 lakh metric ton of clinker same quarter last year. This is as far as cement and clinker sale is concerned. As far as geographical distribution of cement is concerned, in Northeast we have sold around 6.
I'm sorry to interrupt you, sir. We are unable to hear you clearly. Ladies and gentlemen, we request you to stay connected while we check the line for the management. Ladies and gentlemen, thank you for patiently waiting. We have the management line reconnected. Over to you, sir. You may please go ahead.
Yeah. As far as geographical distribution of cement is concerned, in Northeast we have sold around 6.35 lakh ton as against 5.37 lakh ton during same quarter last year. And as far as outside Northeast is concerned, we have sold 2.27 lakh ton of cement this quarter as against 1.25 lakh ton same quarter last year. In terms of blend mix, it is almost 2% of OPC and rest is PPC. These are the quantitative number of the quarter. Now I will take you through the financial. The total revenue figure for this quarter is around 554 crore as against 423 crore same period last year. As far as EBITDA figure is concerned, this quarter we have done an EBITDA of around rupees 74.55 crore as against 91.41 crore last year. PAT is rupees 43.82 crore as against loss of approx rupees 2 crore in the same period last year, due to the exceptional item of rupees 64.57 crore in Q3 21. On per ton EBITDA basis front, it is rupees 853 during this quarter as against 1322 per ton same quarter last year. This is what our quarterly number for third quarter. The total revenue figure for the 9 months ended December 21 is around rupees 1470.88 crore as against 1116.69 crore same period last year. As far as EBITDA figure is concerned, during 9 months ended December 21, we have done an EBITDA of around rupees 256 crore as against 248 crore last year. PAT is rupees 158 crore as against 102 crore in the same period last year. On the per ton EBITDA front, it is 1137 during the 9 months ended December 21 as against 1385 per ton same period last year. These are the quarterly and 9 month year-to-date figures. Now I request all of you that if you have any query, you can ask the same, and I will request Vaibhav to moderate the query wherever it requires. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1 at this time. First question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi sir, I can see that your transportation cost per ton has sort of increased by 8% Q on Q. Our assessment is that diesel prices were sort of flat. With that, lead distance have increased. But what we have gathered also from last commentary was that lead distance will decrease as Siliguri will ramp up. Can you please throw some light?
No, I don't think. See, what has happened is if you look at it in the total in this quarter, there is an increase. There has been a fluctuation in the petrol and diesel prices. There is some impact is definitely there for the cost of the fuel which we consume. And the lead distance is more or less remaining the same. There is hardly any difference in, there's no increase in lead distance. I think this quarter our lead distance for the YTD December will be around 220 kilometers. So that remains more or less same. In H1 it was 222 kilometers, right? So there's not much increase in lead distance. So it is largely on account of fuel increase only.
Okay. And secondly, is there any change in guidance of 20% volume growth for FY22?
No, I don't think we are going to change any guidance. We are on track to achieve 20% volume growth. I think on a 9-month period, if I look at it, the overall volume growth has been, it is already at 25%. So I think it will be better than 20%. In terms of volume, we are going to achieve our guidance.
Okay. And last question, what's the update on Siliguri? How is the utilization moving?
So the capacity utilization for Siliguri has improved in this quarter as compared to, I think as of now, if I'm talking to you on 27th of January, if I look at it, the capacity utilization is somewhere around 60%. So it is improving. We are ramping up the capacity. I think in overall quarter 4, we hope to do something around 65. By the end of quarter 4, we'll achieve around 65% capacity utilization.
Okay. Thank you. That's it from my side.
Thank you.
Thank you. Anyone who has a question, star and 1 at this time. Participants, please press star and 1 if you wish to ask a question. The next question is from Uttam Srimal from Axis Securities. Please go ahead. Uttam Shrimal. Your line is unmuted. Please unmute and go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, in terms of pricing and demand, currently, how are you seeing the pricing in Northeast and East, and how is the demand as you see in the January till date? And how do you see moving ahead, demand will pan out, and as far as the pricing is concerned? Because we have seen there has been a lot of correction in pricing in Eastern market. So your take on this?
Yeah. So to see, I'll take this question in two parts. One is definitely Northeast, and other is East. So in Northeast, what we have in quarter 3, definitely the prices has corrected. I'll say there is a correction in the price by at least 10 to 12 rupees per bag. That's the correction which we have witnessed. As compared to, if you look at it, the correction which had happened in East prices have must have corrected by at least 10 to 12%, right? That's the so we are looking for approximately 40 rupees kind of a drop in East, right? So that was not the scenario as far as the Northeast is concerned. Yes, demand was definitely muted in quarter 3 in Northeast, but it has already started picking up, and hopefully by the time we end the year, I think the full year basis, the Northeast will still achieve an all cement demand growth of around 7%. Coming back to East, the prices in East, which were really muted in the month of November and December, and that was largely on account of certain year-end closing pressures which the bigger players have actually been facing, like Ambuja and ACC had a year-end problem closing in the month of December. So yes, definitely there was a pressure on the volume, and suddenly I think in the month of December the demand has really actually taken a beating. So if you look at it, that overall demand was bad in the November and also in the month of December, and that has impacted the prices. But I think come January, the prices have already started moving up. We have already seen a 3-4% jump in the prices in East. And as far as the demand in East is concerned, I will not say that it is very good, but yes, definitely it is picking up. By the time we end the year, my personal opinion is that overall East will end up somewhere around 3 to 4% overall demand growth. So still, I am looking at a growth because January has really picked up very well in East now. So that's what my take is. And going forward, we definitely look forward that there will be the normal demand growth trend of 6%, 7% in entire eastern region will definitely be able to see in an FY23.
Oh, okay. But during this quarter, our volume growth has been more than 30%. So this volume growth was driven by basically eastern market or northeast market?
Now, if you look at the breakup of these, both the selling patterns we have done, even northeast volume for us have actually grown by around 19%, right? 19-20%. And the east has grown around on 50%, right? So definitely east will grow better because as of now we are a very small player in eastern market. The Siliguri unit has just started, so we are picking up the volume. We are ramping up our volume in Bihar and Bengal, the part where we are actually in our own catchment area, and so it will continue to, I say in terms of volume, it will outperform Northeast. But Northeast volume has grown in this quarter. As I said, there is a 20% growth in Northeast volume also. So it's a combination of both.
Yeah. Okay, sir. Okay. And sir, what has been our trade mix this quarter? Trade and non-trade mix?
Trade is Uttam, trade is around 86% and 14% is the non-trade.
Okay. And sir, my last question with regard to capex. What kind of capex we have incurred this year and for next 2 years that we are envisaging our capex plan?
So, see, I think I've been always saying on my calls that we are going ahead with and putting up 3 million ton clinkerization plant at Meghalaya. That is there. We are looking at setting up a 2 million ton grinding plant in Guwahati. and we are setting up as of now, we're setting up a 12 megawatt WHR plant also. Along with the 3 million ton clinker plant, there will be another 12 megawatt of WHR plant will also be there. So if I look at all these investment will be somewhere around anything between 17 to 1800 crores of rupees, but it is going to pan between next 3 years, in next 36 months. As far as the stage of implementation is concerned, we are in terms of clinker unit, we are have started ordering for our equipments. Yes, we still await the environment clearance, which is there, but we have received the TOR from the Ministry of Environment and Forest. So the TOR is already here. We are fulfilling the requirement. I think we hope that in next 3 to 4 months we'll receive the clearance and we'll start the construction. That is one. As far as Guwahati grinding unit is concerned, we also have received the TOR for Guwahati grinding unit. And we expect again in next 3 months we will also get the environment clearance for that. WHR project for 12 megawatt is already under implementation. We hope to start the project by September 2022. So these are the timelines and the cost for the projects which we have undertaken.
And sir, my last question regard to our fuel mix this quarter. How has been our fuel mix this quarter between imported coal and?
See, I'll say we are not using any petcoke, we're not even bought in this quarter any imported coal. It's completely 100% dependent on Coal India.
Okay, sir. Okay, sir. That's all from my side. Thank you.
Thank you.
Thank you. Anyone who has a question may press star and 1. Next question is from Kunal Kothari from Centrum.
Thank you, sir, for the opportunity. Sir, for the just you mentioned that you are completely procuring coal from Coal India. So, was there any usage of the existing inventory also? Can you share some details on that?
Okay, I don't think there is any inventory left or whatever inventory we had. It was inventory only with us. We had. I can only share with you that we had around 200,000 tons of coal delivery pending from Coal India, which we have started receiving in this quarter. And those coal inventories, you can say that was an inventorized coal with Coal India because we bought that coal in the auction which took place in the month of April and May and June, right? So that was at a much cheaper price than what today the auction prices are. So that you can definitely say, but that coal has already started coming and we're utilizing that coal now.
Say that there will be no need to have import to import any coal. Coal India will sufficiently can supply coal to us.
So that's what we are hoping. We have been participating in all the Coal India auctions which are there taking place in Eastern Coalfield and in the Central Coalfield. So we are getting the supplies there. Yes, the supplies are irregular. I will not say there is a smooth supply, but Coal India has given us assurance that they will be able to fulfill all our demand. We have also entered into for supply of around 150,000 tons of coal for on a full supply agreement with Coal India. That also we have done in this I think last quarter only, and we hope to start receiving those supplies also from quarter one in the next financial year. So we are on track of doing that, and we are absolutely hopeful that Coal India will be able to fulfill its commitment.
Thank you, sir. On this second is, you mentioned that the demand in the Northeast and Eastern market was down. So first of all, what were the reasons for that, and how our company has performed well when the market was down?
So see, the two factors Northeast, the demand is normally the demand is always, and it actually stretches. If you look at it, September, October, November are largely months which are demand starts picking up, but not to that extent. So there is a carryover of Q2 that happens. So demand was generally down, and I will say that demand was largely down from the infra segment. Retail demand has started picking up from the month of November and onward. As far as we are concerned, what we have been able to do is that I think if you look at it, our way of working, what we have done is we have launched a new campaign in this particular, I think when we have started in the month of April, last February, when we started the Siliguri plant, we launched a new campaign where we had taken Akshay Kumar as our brand ambassador. That campaign was carrying on. So we could find a good traction for our brand, not only into the new market in Bengal and Bihar, but also in northeastern market. And slowly, I can say that as a brand, the people will start looking at us as a national brand, then of a more of a regional brand, because now we are also present in good part of eastern market. So that will definitely add value to the overall brand recall for the company, and it will definitely help achieving more volume for the company. So I think we have seen that traction in Q1. Hope to continue the same in coming quarters.
Yes, sir, very much.
Thank you. Anyone who has a question may press star and 1. Next question is from Rajesh Ravi from HDFC Securities.
Yeah, good evening, sir. I have few questions. First is on the coal follow-up on the costing side. You are saying that you're continuously getting coal from Coal India, and so in this quarter there is a sharp spike in cost. Okay, so could you explain what is the per kilocal costing that you incurred in this quarter, and now that your old inventory mint which you had done is coming through, how will that change the cost metric? And in subsequent quarter, basis the current price, how will the cost dynamic behave on the fuel side?
So Rajesh, the cost of coal, I'll say that today, if you look at it in the month of January, when coal auctions are taking place, the auction prices are hovering somewhere around, I think the last auction which Coal India did, the last price that went up to was 2.2 or 2.3, right?
Per kilocal, okay.
Per kilocal.
Okay.
And in our case, I think we have been able to, since we had a lot of coal which we have taken earlier, that cost will be coming to somewhere around 1.8 or 1.9, right?
Okay.
1.8, honestly. So that has helped, but ultimately, if you compare with corresponding quarter last year, definitely the price will look elevated, correct?
No, I am looking from a quarter-on-quarter perspective. There is a sharp reduction in margin. So September quarter, what was the landed costing which you consumed? Because what you're implying is that 2.2, 2.3 rupees is what you bought into, and the contracted volume, if that would have come in, it would have been at 1.82. So there is hardly 10-15% difference, not more than that. Is that understanding correct? What was the costing in September quarter for you?
No, see, if you look at it, my September costing and in the cost of December, there will be hardly any difference, because whatever coal we have purchased now, that coal delivery has not started taking place as of now, right?
No, on consumption basis, sir. On consumption basis, not on indenting basis.
No, I think the Q3 coal cost will be somewhere around 1.6, 1.7. And I think the quarter is 1.65. So it is almost same, Rajesh.
So this quarter, December, your consumption cost was 1.65 versus September 1.6.
Yeah.
So in that case, why should the cost be so high sequentially? Because you did good on volume. Your input cost numbers are significantly higher quarter on quarter. So what explains that differential? Because there is no other cost which would have gone up significantly.
No,
also, Rajesh, you can see the freight cost has gone substantially higher as compared to the last quarter.
Only I'm saying on the input side, quarter on quarter, if I sum up raw material, change in stock and power and fuel, that number works out to be 2,600 in September quarter, which is now at 3,000 rupees in December quarter. So there is a 400 rupee jump. And you're saying that per kilocal costing is not changed.
No, but where do you find, because power and fuel costs have not gone up per ton basis. There's hardly any increase.
I think Rajesh, there's some error in your reading. So the power, if you look at it, the overall quarter, if you're looking at it as quarter on quarter cost.
Quarter on quarter is what I'm trying to understand, sir.
I don't see see overall power and fuel cost largely remains the same, right? It is not having much change in power and fuel. That is one. I don't know what number you are looking at it. I need to look at those.
So how do we look at if per kilocal costing has not changed and electricity consumption cost would not have also materially changed, barring 5-10% impact.
One thing you have to, Rajesh, you have to look into, because from Siliguri, because last quarter there is a 45,000 of the cement we have purchased from the...
No, September quarter, sir. In September quarter versus December quarter I'm looking at.
September to December, but because you are talking about the per ton cost, but we don't find any such increase over there in power and fuel cost.
So, Rajesh, I'll request you.
Just send me that, I will reply.
Queries?
Sure. I'll talk to you separately. And second is,
Not an issue.
yeah. This trade non-trade mix, you're now at very high trade mix, 86%. So, how is your east markets? Are they also similar trade mix, or they are different from your northeast sales?
So we are only focusing on trade segment. That's very clearly indicated by the fact that the kind of work we are doing, we are largely focusing on trade, because you have to understand that we are only focusing on North Bengal part of it and East Bihar, right? Covering the entire Bihar market and the entire Bengal market. And we will be only focusing on a non-trade segment in these markets, right? And largely into the NB1, which is normally Kuch Bihar, Jalpaiguri, Darjeeling, and Sikkim market for the non-trade business. So I don't see that non-trade business is going to spike as whatever it is. I think at the max, on the worst of time, I think there can be 20%.
20%, okay. And third, on the capex front, the clinker debottlenecking, is that exercise complete, sir, or is some part of that still pending?
No, I think the last shutdown we have already. There's nothing pending on that. That exercise is already complete.
Okay, so what is the total clinker capacity now, sir?
So I think we have been saying that from 2.8 it will become 3 million tons. So it is already now it is 3 million tons.
So it is now done, and this happened in September quarter, last September quarter.
Last shutdown we took in the month of August or something. Right?
Okay, so in this financial year, August, you have already completed the debottlenecking exercise. And now what is pending is that the one first phase of WHR, which you are expecting to come by September next year, and then the grinding and then the clinker unit, and concurrently with the clinker unit, a 12 megawatt WHR would get commissioned.
Absolutely.
And how would the capex number look like, sir, for this year basis now, because you are already in January? So for full year, what is the target you're looking at, capex spend?
I don't think we are largely spending on the capex of WHR at this point of time, because the orderings have just started. So hopefully by end of it, I think we have around 150 crores budget for this 12 megawatt capex plan. And by end of this year, my estimate is somewhere around 75 to 80 crores will be spending on this, and maybe another 10, 20 crores of advances we may have to give for some, because ultimately all the advances and everything will start going from the April only, because we still are waiting the environment clearance on that. So hopefully, it doesn't look like that in this quarter for the new projects, in this year for the new project we'll spend more than 100 crores.
Okay. So 100 crore towards max for the new projects, and 150 out of this 150 crore, good chunk would be spent this year on the WHR and routine maintenance capex. Great, sir. I'll come back and you. Thank you.
Thank you. Anyone who has question may press star and 1. Next question is from the line of Indrajit from CLSA.
Hi, sir. Thank you for the opportunity. Few questions.
Yeah.
One, while you mentioned that January volumes or demand has been better than November, December, but on a YOY basis, does it still remain meaningfully lower, or even on a YOY basis, we are seeing improvement in demand in January?
So we are definitely seeing a demand. I think I'll say that even in YOY basis, we are seeing a demand jump in the month of January. And I think we are still clocking at around current run rate also, the volume growth is more than 20%.
I'm talking
On
from
YOY.
the industry perspective, not just for us. Overall, on the industry perspective, do you think that East and Northeast is growing ahead of, I mean, the volumes are ahead of last year, or on industry it is largely flattish or slightly up?
I will also tell you this, that on the industry perspective also, I still feel that people must be ahead in their volume in terms of year-on-year basis. Definitely the volume must be 15 to 20% higher than what they were. That's the kind of traction I think the people are seeing in the month of January.
Wow, that's good to know. Second, you mentioned that in the December quarter, East saw 10 to 12% price decline, and January you are seeing more like 4-5% price increase so far. So is it fair to assume that from say December quarter average, current prices are still 4-5% lower, East, Northeast, particularly East, not so much Northeast?
I'll not say that. When I'm talking of 10-12% price drop, this is largely on the peak of it. So if I compare the peak of what peak it had and then till where it went down, that difference is around 12%. So if I average it out, it will be. I don't think it will be more than 7-8%, right? And I think half of that, more than half of that must have already been recovered. I think this. And that too also I think the prices started going up only in the, I'll say from 10th of January to this, right? So you can fairly assume that 50% of that price drop has already been recovered in the month of January, and the balance is yet to be recovered. So you can assume 50% recovery on that.
Sure. Thank you. And one last question. You mentioned that your Q3 average coal cost was 1.65 per kcal. So, and given the visibility that you have now, what could be the likely cost in Q4? Will it be like closer to 1.8 or would remain at these levels?
I think the coal cost will be closer to 1.8 only, 1.75 to 8. That's what we are looking at it, because what will happen is over a period of time, although I have coal which we have bought it at 1.6 or 1.55, 1.6 from the Coal India, but the problem is that the supplies are so erratic that at times you need to go to the spot market and buy the coal. So that increase, and that spot prices are hovering around at 2.2, 2.3, 2.4 also, right? So that is impacting the price. It will all depend on next quarter, what's the supply levels for Coal India and how much we have to resort to go to the open market and buy the coal, right? So, but we still hope that we'll be able to contain it within 1.8.
Sure. Thank you so much for your answers. That's all from my side.
Thank you. Anyone who has question may press star and 1. Please note this is a final reminder for questions, and no further reminders will be placed after this. We have the follow-up question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. You said that Q4 costing will again be higher on a quarter-on-quarter basis. So, and if realization does not materially improve, in that case, we would be again looking at below 1,000 rupee EBITDA margin. Is that understanding correct?
No, Rajesh, that's my reading actually, but that's not my reading. My reading is very clear that, see, the prices, we still sell, if I look at 65% of our volume in Northeast, and Northeast prices have not corrected the way the East prices have corrected. And I think the Northeast prices have already gone back to the level where they were, right? And we are still hoping to add, because there will be some cost pressures which we will definitely like to pass on. So my understanding is that Northeast prices will behave much better from there, and the volume growth will be definitely there. That will definitely, and that's the highest EBITDA contribution space for me, number one. Number two, when I say that there will be a coal price hike, you have to understand in this quarter's EBITDA margin, there are few one-offs, right? I think which people should read into it, and I must highlight that. So largely, if you look at it, the one-off is that we have spent a good amount of money in promoting this new campaign called Hai Tayar Hum, and with Akshay Kumar as a brand ambassador. So that is primarily for Siliguri plant, which has come up, and it has. There is a good impact of, I'll say on a full year basis, if I look at it, the impact will be about 15-20 crore rupees only on this advertisement, right? So that itself is adding on the cost. That is one aspect we are you're keeping in mind when you look at FY23. Coal price, when you say that, I'm still expecting the coal prices to be little harder because of the fact that whatever inventories we have with Coal India, it is very unpredictable to say that how much Coal India will be able to supply in spite of all the promises that they're doing. So we may have to resort to spot private market or a normal market buying, right, where the Coal India is not available. And that prices are around 2.30 rupees or 2.40 rupees. So it will all depend on what mix we are able to achieve at the end of the quarter.
And this advertisement cost 15 crore additional. So could you quantify what sort of actual cost expenditure has happened in this quarter versus your normal quarter?
Rajesh, see, I think the number.
Because what we want to materially understand is that this company, this quarter number, your margin is almost one of the lowest ever. Okay. The whole.
So try to understand. So this quarter advertisement publicity cost is around 13 crores as compared to corresponding quarter last year it was 4 crore. Okay. So it is almost 3 times what we had, right? It was 4 crore and now it is 13 crore. Okay.
So that would, versus a normal, scenario, it would 50-60 rupees jump.
9-month basis, the advertisement cost is around 31-32 crore as compared to 7 crore.
Last year was also a truncated year in terms of expenditure, right?
Correct.
So no, we are not looking from a last year perspective. See, where I'm coming in from, your coal inflation has not really baked into third quarter performance, as you are suggesting, in a sequential basis. There is a normalization of your advertisement cost, which would largely remain at similar levels, given that you are still not ramped up this Siliguri, at least 70-80% till the time you need to pump in advertisement expense. And this Siliguri, there was a thought that when Siliguri starts delivering, you would have substantial cost saving on your fuel lead distance, your fly ash lead distance, and overall other synergies which you're looking at. Now, none of these seem to be coming through in the numbers, and the margins is on a downward trajectory. You were once the leader in terms of margins in the cement industry. So we are trying to understand where, these things are not under your, how do you look at these numbers? When would we be able to see Star Cement delivering those 1,200, 1,500 type of a number? And what would take the company towards those numbers?
So Ryan, let me show you. So you ask a broader question. Let me reply it in a sense which I am looking at. What I am looking at, how does Star Cement go back to reporting 1,100 rupees per ton EBITDA, right? Now look at this like this. Don't look at quarter numbers. I understand that quarter numbers are the lowest in the history of Star Cement. That is there. as I say, so you asked about advertisement. So in this year, our advertisement cost will be somewhere around 45 crores, right? Normal year, I'm not talking of FY22, FY21, which is a truncated year. Normally, we used to spend around 15 crores odd or 15, 18 crores, depending on what we do, right? So you can say that there will be around 25, 30 crores overall cost spend, which I'm going to do it in this year. That is one, okay? Second, when you say that, yes, this year's numbers are really largely impacted because we are at a landlocked place. The freight cost has also gone up. The cost of oil are also going up. The coal has actually impacted us considerably. Yes, there is a saving in fly ash. All those savings are, but they all are overshadowed by increasing the fuel cost. That is second. Now, if you ask me where do I go, and even if what I end up in this year itself, I think this year 9-month EBITDA margins still remain at 1137, right?
Mm-hmm.
I will still say that I will still end the year, and FY21 I have ended at 1350, and FY20 was at 1400 rupees. Now I'll tell you what will bring it back to 1400 rupees, right? And I'm still hopeful this year will still report, at least if it is not that, it will be 1350 kind of a number, okay, on a full year basis. That is one. Now let me also tell you what we are doing to bring it back to 1450, 1500 rupees. Now, as soon as I complete this WHR plant, right, it will add 13, 14 megawatt to my existing. My total requirement of power is around 28 megawatt at this point of time, okay, at Meghalaya. Right? It will add 50%. Yeah, it will give me a saving of around 150 rupees a ton. Right? We have also done certain, we have taken a fleet of around 100 crores. We have spent 100 crores on our own fleet management. That is going to add around 50, 60 rupees per ton on an overall basis, I'm saying. That will give me, so that will make the savings at around 200 rupees, right?
Okay.
We are still doing, and they're still also doing some process improvement in terms of doing certain additions in the raw material level and trying to change the raw mix. I hope to get at least 100 rupees from there. I'm looking for 300 rupees contribution, which is in my hand, right, which I can do. I'm not banking on anything which is market driven. So if I add around 300 rupees in that, and still I'm been able to report 1300 rupees EBITDA at this year end, and add 300 rupees, I'm already there at 1600, right? And take or give 2-3% here and there, I'll be able to give you a 1500 rupees EBITDA. So that's what our plan in terms of moving back to 1500.
Right.
Is definitely a quarter which is in terms of margins, it's a worst quarter. I agree with you.
But for this year target of 1300, it would imply the last quarter number should be north of 1600 rupee per ton.
See, if you look at analyze our quarter 4 numbers for all the last, I'll say 2-3 years, you will come to know about it. What is the quarter 4 numbers in coming year?
Agree. You have been delivering earlier also those numbers. I'm saying on a sequentially, what would take you there? So this is what I just wanted to understand. Given that your fuel prices you expect to be higher sequentially, and that is one of the major cost elements. That is what we want, stars to deliver those 1400, 1500 EBITDA numbers, which in Q4 we have been always been delivering those sort of numbers.
So we are really hopeful, Rajesh, that we will be able to deliver that number.
Great, sir. We look forward to it. Yeah. Thank you, sir. That's all from my end.
Thank you. Next question is from Shravan Shah from Dolat Capital Markets.
Yeah, thank you. Sir, you have explained in detail the previous participants. Just to add on that, in terms of the raw material per ton cost, so that even if on a per ton basis, are we expecting that to decline significantly? You explained other things in terms of the power and fuel freight, other expensive advertisement, but on the raw material, including the change in inventory, so there, do we expect a significant decline at least in the fourth quarter?
we are not looking at to achieve everything in raw material which in the next quarter itself. We are in a process of redesigning the raw mix. We will definitely be doing making some value addition in that. But just to quantify that in quarterly basis will be hard on my part. It will not be possible. We will keep on, and it will all depend on what is the availability of the raw material, what is the mix we have been able to achieve. And these are largely dependent on the chemistry which happens between the raw material, right? So I have to ultimately deliver the best quality cement to the consumer with the lowest possible cost. So we will be definitely doing it, but all those benefits are going to come back to you in quarters to come. I cannot quantify which quarter is going to come.
So the broadly, previously, just now what you said in terms of the 300 rupees savings, which is in your control, not the cement prices higher. So out of that 300, this entirely, are we expecting in the fourth quarter the cost reduction or the savings, 300 rupees per ton?
Please understand, I talk about WHR, which is going to start in the month of September 2022. So I cannot prepone it and make it in quarter 4, number 1. When I talked about that we are going to have fleet advantage, that is also going to come in quarters because now the trucks have started coming into the system. They will start contributing it, and in some quarter we'll see partial benefit, and the next quarter we may see a better benefit, right? In terms of raw material and other mix, what we are doing, some we are going to see in quarter 4, some will be in quarter 1. But definitely in 2-3 quarters, you will find these numbers coming up. And this 300 rupees kind of number which we are looking at, it will be able to realize it. And will come back to our original number of EBITDA.
Sir, have you shared the lead distance for this quarter?
Around 221 kilometers.
221. So last quarter, you mentioned it was around 300 odd kilometers. So this quarter it is 221. Am I right? Sequentially, it has reduced significantly.
No. It was similar numbers. It was 225, I think, last time. It was somewhere around 225 only. It is in the same trajectory, around 220 trajectory.
Okay. And sir, last request. So even the previously also many participants in the last quarter also I have requested in terms of sharing the power and fuel of freight and other expenses line item with the results. So what happens is we have to keep on following up, and we got the answer that it will be discussed during the call. But you also need to understand that we need to also have to update to our clients. So why not we make a policy that at least even if you don't give as a part of the P&L line item, at least as a press release, why not we give? So including the volume also. So why can't we share that thing which all other companies are doing?
No, I think I don't see any problem in sharing those numbers. I think we should start sharing it. Let me just figure it out from this quarter we'll be able to share it, okay?
Okay, thank you.
Thank you.
Thank you. We will take the last question, which is from the line of Harshal from IMAP India. Please go ahead.
Thank you for the opportunity, sir. I would just have one question. You talked about capex plans. So there may be many smaller players in distress in the region. So are you planning to consolidate through acquisitions?
Can you repeat the question again?
So there may be, you talked about capex plans across and for next 3 years. I just want to check, ask you, there may be many smaller players in the region in distress. So are you planning to consolidate maybe through acquisitions?
No, see, definitely, if there are opportunities, we'll definitely have a look at it. Only question is, there are smaller players, but a transaction sector, when there is a willing buyer and a willing seller, then only a transaction will take place. And we have to also look at what value the asset is available to us. If there is any asset which is available within our ambit of value, and it is at least an EPS accretive addition to our balance sheet, we will definitely look at that, and I think we are actively looking at 2 things. But only question is, we haven't signed and zeroed on anything which will add value to us. So that will happen, and we continue to look towards any acquisition opportunities.
Sure. So, sir, so the capex plan that you gave, I mean, you just mentioned earlier in the call, that is pure from organic perspective, right? I mean, you'll set up your own capacity in Meghalaya, Guwahati.
Absolutely, that is pure from organic perspective.
Okay. All right. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I would like to hand the Vaibhav Agarwal for closing comments. Thank you, and over to you, sir.
Yeah, thank you, Aman. Sir, I had a few questions actually. Sir, you mentioned about one-off in the current quarter. So, sir, you have mentioned about the advertisement cost as a one-off, and beyond the advertisement cost, are there any consulting fees also which you have paid to BCG, which is also, or is it including the number which you told?
Yeah, there is a consulting fee. We are taking few suggestions from BCG. There's a consulting fee of around 5 crores.
Okay.
But I think that's going to come in next quarter also. So that's what I didn't say that that's a one-off thing. But yes, this is one-off. Probably this may be a one-off thing for this consulting fee will be one-off for this year probably. Maybe next year it will not be there. But that's what, because it's going to continue for next 1 or 2 quarters. I did not mention it in one-offs, right? So probably that is it. But yes, in this quarter there is a consulting fee of 5 crores to Boston Consulting Group.
So entire 5 crore charge to this quarter, right? Entire 5 crore rupees charge. And next quarter also again 5 crore you are expecting that number to be?
Yes. Probably we'll be expecting that kind of number.
So your total one-offs will be like 13 crores plus 5 to 18 crores is the one-off. Is that right?
Yeah, that's the right reading. Yeah.
Okay. And sir, on the advertisement part, which you told 13 crores as a expenditure for the current quarter, in how many quarters is it an advertisement to seed the market initially and you tone down the advertisement to come, or is this a number?
No, this is because that obviously since we started the plan, we have to seed the market, and a large part of this expenditure is towards seeding this market. But overall, we have to ultimately understand that we are largely a regional brand, right? We were a regional brand. Once we are moving out of Northeast, we have to also take at least make a top of mind recall of the consumer that we are also a national brand as compared to Ambuja or Ultratech, right? So we have to take that fight with them. And that top of mind recall will only ensure that our products are also accepted in the same way as Ultratech is accepted, and we have that pricing power, and we are priced equivalent to these brands, right? So that's a journey which we have embarked. But yes, in this quarter it is definitely in this year it will be definitely higher, and we hope to achieve the objectives which we have in coming 1 or 2 quarters.
Right. So I also wanted to ask you about the trucks which you have purchased. I believe you have purchased 150 trucks in your own fleet, if my understanding is right from the ground. So what was the objective, the main objective behind purchasing this trucks? Was it to and what did you face any resistance from the ground in terms of any extra anything like that? And what are the benefits you are posting in future with all your own fleet?
So we have taken a fleet of around 200 trucks for us. We had already had 100, so it's a 300 fleet. What we wanted to do is, you have to understand that the Lumshnong plant is largely dependent on road.
Right.
And we have a plant which has a dedicated supply for clinker. And there are fluctuations in the market in terms of freight availability, price, rate, and all that, right? So we wanted that as far as the supplies of raw material is concerned, we are actually assured in terms of getting our raw material to the plant and then being able to supply to the market. And also, by doing that, we will be able to have some control over the availability of the truck and the prices, right? And that will also give us economies of scale, putting 300 vehicles, and that will definitely give us some economies. So that's what the whole purpose of buying these trucks.
And is it becoming industry trends in your market? Because I believe most of the clinker plants in Meghalaya only, and other players also, they have purchased similar.
No, we are not doing anything in the market. It has to be completely, all the complete fleet is been engaged in doing our own.
No, I'm asking, is there an industry trend there that people are buying fleet for their own?
Yes. There are industry, there are people who are actually trying to deleverage in terms of logistics. So that, and you have been seeing this, the erratic behavior of transporter in various parts of the country. Right. And I think very large players are also thinking of getting into having some kind of control over the transport, right? So probably that's what we are also planning.
So, sir, in future, at any point of time, will we consider having our own fleet for distribution also, for final distribution, or it will be like not be on the cards?
As of now, we have not taken any decision on that. If there will be any decision on that, we'll definitely come and tell you on that.
Right, sir. And so one more thing I wanted to understand about is the basically you had mentioned in the call about your EBITDA guidance for the full year, about 1,300 rupees. So, sir, if I look at the 9-month figure, even including the other income and everything, that's about 1140 for the current quarter, for the 9-month figure. So, if you are looking at that number of 1,300 rupees for the full year, so you are guiding on the fourth. I believe what the guidance you have given is a directional guidance, not a fourth quarter guidance, right? 1,300 rupees, so directional guidance for the next FY23 onwards kind of a number, or is it a guidance for Q4? I just want to clarify that. Because if I look at the 9-month number, it's about 1140 rupees EBITDA per ton on a 9-month basis. And to achieve a 1,300 for a full year blended basis, the number has to be quite high for Q4. So just wanted to clarify that for
So I tell you what, I have 1,300 number which I'm talking is for the FY22 full year number. Right? That's what the number I'm trying to achieve. Okay. And we will be able to achieve it. The other guidance which I gave around 1,400 and 1,450 kind of a guidance which is there with the savings coming in and taking in and getting into it, that's a futuristic guidance. So 1,300 is definitely for this year. Okay.
Understood, sir. Understood. And just one last thing, so on the capex front, so just wanted to address that point. So we are yet expecting the AC to come in, right? But we have started ordering the equipment for the clinker. Is that what you mentioned on the call?
Yes, we have started. So we have been given to understand that since we have received the TOR, we hope to get the environmental clearance shortly. So we can always go ahead and start negotiating with the vendors and suppliers and all that. So all that discussion has already started, and we'll start placing orders because in anticipation of that, we'll definitely place the order because the time delivery of machinery is definitely very high. So we have to be a little ahead of schedule on that.
And sir, before you conclude the call, I want to take a last take on your the increased intensity of new players coming to Northeast. So what is your take, sir? We hear that even South players are coming to Northeast all the way from South. So how do you read them, sir? And do you see that they will go away when in times to come, or they will stay there for a long time? And are there any opportunities which these players are looking in terms of acquisition also, which is there to your knowledge, you can share with us?
No, see, I will say I'm not expecting these players to go away. They've always been there. They earlier used to hold 20% of the market of the Northeast. Now they have around 11-12% of the market of Northeast. And we are not here to say that they will definitely go away. I'm saying, yes, there are few serious players. There are few seasonal players to remain in Northeast. Northeast it's not a small market now. It's a 10-12 million ton market. And people will definitely have a look at it. But I think as a regional advantages what we have, the kind of distribution setup which we have, and the penetration levels which we have, the counter share which we enjoy with this distribution, these are things which are very hard to replicate in Northeast. That is one. Second point is that is why to consolidate our holding and consolidate our position in Northeast, we are again embarking on a new capex plan in Northeast that will further consolidate our position in Northeast. And but I'm not seriously worried about people who are coming from all the way from South and all the way from. So those are not my worries. Yes, there will be few players who will be a player like Ultratech and Lafarge and Ambuja may be there, and they have always been there. There may be little increase in the intensity of their dispatches during the rainy season, but I think that's quite natural, and that is going to be there, and we have to live with it. And the further volume addition for us definitely will help us control our market share and increase the market share in Northeast.
Right, sir. Thank you very much, sir, for those elaborate answers. Thank you. On behalf of Phillip Capital, I would like to thank the management of Star Cement for the call opportunity. Also, many thanks for participants joining the call. Aman, you may now conclude the call. Thank you very much, sir.
Thank you very much. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.